Hello everyone, my name is Joe Cass, Director at S&P Global Ratings. I'm the creator and the host of Fixed Income in 15. Today I'm talking to Peter Harrison, Group CEO at Schroders, and Dan Draper, CEO at S&P Dow Jones Indices. Today we are talking crypto, we're talking the realities of being a high-profile CEO, and also memories of meeting the Queen. So a quick reminder that the views of the external guest are their views alone, and they do not represent the views of S&P Global or its divisions. Okay, great. Let's get into it. Peter, I want to start at the beginning of your career. Would you be able to talk us through your career to date from university graduate to RWC, back to Schroders, and eventually as the group CEO?
Thanks, Joan. It's great to be on. Look, my career is very unimaginative. I've done nothing else but asset management all my career. I started as a graduate trainee at Schroders, having coded my way through university. And I spent several years here before having a career. JP Morgan was where I spent the longest chunk of career. And then at 40, I realized that I wasn't the best investor in the room. In fact, there was a lot of people a lot smarter than me making investment decisions. So after 20 years of being an investor, I switched to manage investors. And a sort of getting a startup going in 2006 probably was a bit consensus. We went straight into the financial crisis as a startup with a few portfolio managers. But RWC then grew. And by 2011-12, I was looking for a good shareholder to join alongside the management of RWC. And I took it to Schroders. And after 2 years of Schroders being a great shareholder of RWC, they said, why don't you join us? And I kept saying, no, I'm having a great time running a boutique. And then my 10-year-old son said to me one day, Dad, what would you do if they stopped asking you? And the insecurity inside me meant that 3 months later, I was working for Schroders and took over a couple of years later as CEO. So it doesn't show a great deal of imagination, I'm afraid, Joe.
Great stuff. Dan, you've also had a very interesting career to date, so spanning 3 continents, 7 different companies, including companies such as Goldman Sachs, Salomon Brothers. Can you talk about your previous roles and your current position at S&P Dow Jones Indices?
Yeah, no, well, Joe, great to be with you, Peter. It's a pleasure, an honor to kind of join you on the webcast today. Yeah, look, I have over 30 years of pretty diverse and I guess broad financial markets experience. I started in investment banking out of university with the old Salomon Brothers. I focused on power generation and infrastructure investing, which was fantastic, kind of grounding in terms of valuation projects and companies and things. And that gave me a great chance early in my career to move or be seconded to Asia, and that was in the mid '90s, which were pretty incredible times for infrastructure investing. Really developed kind of more of a passion for the markets, and transitioned after business school. You mentioned Goldman Sachs, and particularly in their equities division, but kind of moved to more of the sales and trading environment, and then kind of over the years made my way to the buy side and was really a client for about 15 years of S&P Dow Jones Indices and frankly all of the major index providers. So I was really pleased when the opportunity to lead S&P Dow Jones Indices came up 2.5 years ago, and it's been phenomenal. And I'd say my experience, particularly on the buy side as a client, was really around passive investing. So in the early days, I was in London at the time when UCITS, the directive came into being, and kind of cross-border marketing, and that really fit nicely with the growth of things like ETFs and kind of passive investing starting to take hold there. And again, kind of continue to move forward there. But yeah, it's a privilege to, like I said, lead the S&P Dow Jones Indices business, and frankly, working with active managers for benchmarks or passive managers for building passive products. There's certainly a lot happening, and very fortunate to be with a great team.
Excellent. So, Peter, there are 2 topics that I bring up in pretty much every episode of the Fixed Income in 15 podcast with senior investors like yourself: ESG and digital assets. Starting with ESG, can you talk us through Schroders' approach to ESG and also your personal thoughts on the future of ESG?
Yeah, thanks, Joe. They're probably the right 2 topics to bring out with everyone. My sense of it is that this is the first time our industry's been given a purpose. So we used to just be looking after people's savings, moving it from the left to the right, and suddenly there's a third dimension. So when we all grew up in this industry, it was about performance and risk, and for many years it was just performance, and then risk got bigger and bigger, and now there's a third dimension. And the third dimension is what impact are you having by generating that performance? And I guess the parallel is going into a food store and looking at the ingredients of something you're buying and saying, do I want the calories? Do I want the saturated fats? Do I want this to be organic? And increasingly, our clients are saying, we care how you make that performance, and they all care for different reasons. So if you're a Taft-Hartley Union client in the US, you care about different things from a Dutch pension fund, but increasingly people care how you make your performance. So I think of it as a profound change and a massive opportunity to differentiate firms across the industry. So we have made a huge investment in data, in embedding the thinking in both our public and private markets thinking, but also in rethinking product design, getting inside, working alongside development agencies to do blended finance. Everything from microfinance, doing Asian female empowerment, right the way through to Article 9 impact funds in Europe, through to sort of plain vanilla energy transition mutual funds. So it's a massive change, and I think the industry hasn't yet comprehended it's quite the significance of it, and I think it's become a massive industry for regulators as well, and I do fear that in an attempt to fight what they fear is greenwashing, they're killing the beautiful butterfly whilst it's still a caterpillar. There's a danger that we regulate what is good thinking out of recognition, which is going to be a shame, because this is about individual preferences, not what a regulator thinks should be an answer to what ESG equals. It doesn't work like that with food. It doesn't work like that with investing.
Great. And Peter, Schroders acquired a stake in a blockchain and digital asset-focused asset manager, Fortius. So what role do you think digital and crypto assets could play in the institutional investment world?
So look, I make a massive distinction between crypto, which is, in the current environment, pretty well uninvestable for most, through to blockchain, which I think is a transformational technology. So a big bifurcation there. But look, mutual fund, we've passed peak mutual fund. The clue's in the name, the 1940 Act. This technology is 80 something years old. It's not going to be the thing that people default to in future. It's already not the thing in the US, and it will increasingly be challenged. And I think the ultimate form of alternative will be some form of tokenization. And so you're going to have that done on a piece of blockchain. And it's very timely because you've got this huge pressure on public markets, a massive shrinkage in the number of public companies, and more people thinking, how do you democratize private markets? And so you've got this coming together of old technology on the one hand, of mutual funds no longer appealing, in most of the major markets. You've got the private assets or opportunity, and you've got the technology. So I think it's one of those interesting moments where three things are colliding. And you could get quite rapid acceptance.
Fantastic. Dan, S&P Dow Jones indices has a range of crypto indices. Got the Bitcoin index, the Ethereum index, and many more. What has been the level of interest in these products? Who's interested? And has that interest grown or dampened over time?
Yeah, well, Joe, if I could just kind of echo, I think Peter's comments were fantastic regarding, I think, the digital asset space in terms of the relevancy and kind of the future. I think the technology underneath it, the blockchain is very, very applicable, and it's going to be increasingly necessary. And this broader movement of the investment world from analog, and I love the 40 Act analogy, the daily pricing, of a fund, to intraday. And I would argue even like ETFs, we're really probably a first significant step in that digital transformation. And now we're getting more into the content itself and obviously the technology. And if you think about just on blockchain itself, I mean, the journey we've been on with passive investing, taking out intermediary costs, these are things that are going to benefit end investors enormously around asset allocation. I mean, we estimate just from our S&P 500, the mid cap 400, and then the small cap 600 that investors have saved over $400 billion in fees over the past 26 years, comparable to the older analog technology, in mutual funds. So if you really look at that, if you think about being able to offer the customization, the more precision in skilled asset allocators like Schroders and many other firms around the world on behalf of their clients, again, these should be very beneficial to larger investors. And ultimately, any successful marketplace is predicated on one thing, and that's trust. And I think being able to get more information more timely is something that hopefully builds, overall better ecosystem. And then just quickly looking at, digital assets or crypto specifically, if I think about from an S&P Dow Jones perspective, you tend to see initially markets absorbing new information, right? And putting together, what does this information mean? And on a linear basis, this is normally a barometer, right? Give me an idea. Back in the late 19th century, I see all these railroads growing, and I'm trying to estimate the size of the U.S. economy. Well, hey, maybe the U.S. stock market, and I can do the rail index, which later became the Dow Jones Transport, and then later industrial average. These were barometers that were trying to measure some level of human progress or even economic growth. And the barometers then became benchmarks. So now I've kind of defined a market with industry groups, and now I can really see from an investment perspective relative how it's doing. And then what we've seen in the last 20, 30 years is then the barometers into benchmarks, and now benchmarks have become investable indices, right? Or kind of, more precise tools. So we see that, in the, I think in the digital asset or crypto space now, there's information we're trying to, and that's where we use a firm called Luca in terms of our data, trying to find the best data, build the benchmarks, and then frankly, it's accelerating is then taking those benchmarks into potential investable products. But we have to do this in a way where the ecosystem is being built properly, and then again, skilled investors and fiduciaries can then determine, are there real risk premia, are there real diversification benefits? For them to really use these digital assets and crypto assets, and we're really in the midst of it. And finally, kind of your question, I would say is that we are seeing increasingly with all the different exchanges around the world and 24/7 pricing, but we're seeing more and more investors wanting this information, looking at the barometers and trying to kind of measure the impact. We are seeing some early stage investment products, typically things like structured products, and there are some kind of nascent kind of ETFs that are off the market. But I think there's a lot more to be built around that ecosystem.
I think Dan makes a great point, Joe. It's how you create that ecosystem, which gives investors the confidence and the reliability that they can build a longer term mindset. And we're in the early years of something which is clearly going to be a much bigger force. But and how you provide that infrastructure is going to be a key part of making it a mainstream applicable thing for pension funds and for other investors.
Fantastic, thank you both. Peter, wanted to get your thoughts on private markets, what role they can play, and also how are you approaching them as a firm?
So look, I think what we've seen over the last 20, 30 years is a significant shrinkage in the number of public companies, down by 50% or so. And for me, you've seen an equivalent, an almost mirrored rise in the number of public companies. And so the several things going on, given the growth of passive, etc. One needs to think about what is the long-term optimal form of ownership for a business. How can public companies have the time frame and persistency to make long-term investment decisions given the pressures that are on them? And I think that model is being increasingly challenged because private markets have very large long-term stable pools of capital available to them, and they have the ability to incentivize management to deliver against really stretching goals that might be a multi-year focus. So to my mind, as an investor, as a firm looking to provide their clients with a range of different solutions to a problem, you need to be able to cross that public and private divide pretty seamlessly. And the analogy I'd make is if you go back when I started work, equities and fixed income used to exist in two different buildings, and they never spoke to each other. Now equities and fixed income are pretty joined at the hip, and the world's very joined up. But the same is true in public and private today. The firms are different, the structures are different, the compensation arrangements are different, and they're coming together. And I think that as we think about what the investment portfolios of the future look like, you're going to see a much larger allocation to private markets in people's portfolios. And how we facilitate that with the right wrappers, the right performance measurement, the right fee structures is going to be a huge part of the challenge for the next 20 years. So we set about building a big integrated private markets business across the four pillars of debt, equity, infrastructure, and real estate. And increasingly finding that if you blend that, particularly with sustainability, there is a huge opportunity. And the reason I mention sustainability is, we've just finished COP27. We've got to build the largest industry in the history of mankind, and we've got 30 years to do it. And that's the decarbonisation industry. And how we fund that will be largely from the funds that, the clients whose money we are entrusted with at the moment. So figuring out that transition, there's going to be a very significant opportunity. So for me, it exists right beside public markets, and there's a very large movement of funds which is happening between the two, which is going to pose all of us some quite big challenges.
Great. Thanks, Peter. Dan, what do you think the future holds in the indices side of things? So how will investors and market participants use indices going into 2023, but also beyond?
Yeah, well, as I kind of mentioned earlier, I think this kind of evolution from a barometer initially, let me measure something, because now data is becoming so much more widespread in many ways. And those data sets can be extremely valuable. They can also be very commoditized. So I think being able to look at those data sets with robust analytics, again, the experience, judgment of investment professionals to really kind of use that going forward is I think really crucial. So I think it's our job is to continually look for new information, new data represented in our indices and benchmarks to continue to reinforce particularly the liquidity ecosystem in the major benchmarks, things like the S&P 500. But also we've talked about the emerging areas like in sustainability, digital assets. How can we responsibly bring that information, work with on this ecosystem of, we've mentioned a couple of times, everything from the liquidity providers and market makers on the one end to these long-term asset allocators, if you will, at the other. We need to be able to bring in that commonality and kind of the marketplace together. So our job at, I think, S&P Dow Jones Indices is to always be customer focused and value to engage, and where like with Peter and Schroders and other clients, where they're thinking about this product development process, where can we partner earlier with data sets, with analytics, and really help them think about not only their own investment strategies, but this ecosystem that helps rebalance portfolios, helps hedging, transferring risk, for example, among insurance companies. So it's really kind of being a part of that in a very crucial for us, independent and transparent way that the marketplace can rely on.
Great. Thanks, Dan. Peter, Schroders is a 218-year-old family business, with the Schroder family still owning around about half, I think, of the company. So interested to know, what is your personal relationship like with the Schroder family? And as a CEO, do you feel this enormous pressure to maintain and also grow such a long-standing business?
Yeah, look, I can't imagine anything better than to have a group of shareholders who are so committed to the business. So outside our boardroom, we've got a picture of the 5 generations of Schroders who went before, and they do mark a certain significance in the firm of longevity, persistency. And around the boardroom table, the discussion will be, how do we get this right on a 20-year view? And that's a real privilege to be a CEO of a business where the desire of the shareholders is a 20-year perspective of what needs to be done. So now I would argue it's actually harder to get it right on a 20-year view than it is on a quarterly view. But it's a huge opportunity to think deeply about what one needs to do to build the best possible business, and to have that clarity of support with people who are genuinely lovely. I mean, they could not be nicer, better intentioned people who also have a great sense of other stakeholders. So there are family-owned businesses where shareholders are preeminent, but I'm really fortunate the Schroeder family care deeply about our staff. They care deeply about the impact on society. So I consider myself incredibly lucky. But I'm under no illusions. My job is to leave the business a little bit better than I found it, and it ain't going to change. And, from an ownership perspective, it's about doing that right job. So it's in a one sense, it's pretty straightforward.
Great. And Dan, you mentioned before, the CEO of S&P Dow Jones Industries for 2-ish years now. So interested to know, what aspects of the role do you enjoy the most? And also, what aspects do you find most challenging?
Look, I enjoy the people. And I think in terms, starting with kind of my team, we have an incredible group of really dedicated and super talented individuals. So I think the ability to come in every day is certainly different. We obviously have, as the biggest index provider in the world, the most comprehensive range. I think Peter talked about the multi-asset class nature of investing today. And so the ability to come in and really work with an incredibly dedicated group is phenomenal. And look, I mean, say close, second or even there is our clients. I mean, again, with all the issues and the fast changing markets that are happening and the different client channels we have, asset owners and asset managers and banks and all the way through just a variety of needs. It's quite fulfilling to be able to kind of look at these problems holistically, and for us to bring, again, these data sets, but also kind of a different perspective to really help, our fiduciary clients, fulfill their duties. And I think just, the challenges are just having enough hours in the day. I think a lot of growth opportunities, and even with our capabilities, I'm always challenging my team. How can we focus more? We really have to prioritize, and something that's going to help us do that increasingly is technology. And that's really where we're making substantial investments in our platform around data governance, overall kind of the tech stack, and being able to even think about our independent governance processes, being able to do those even more responsibly as our scale grows.
Great, thanks, Dan. So Peter, Schroders opened a new HQ in London, I think a year or two before the pandemic. I've been to it, lovely building, very nice. But I saw that you gave the Queen a personal tour of the office when she opened it. What did the Queen have to say about the building? And also, what were your lasting memories of meeting her?
Oh, the lasting memories is kind of very easy. She was just so keen to meet real people and spoke to everybody she could possibly, as we went around, she just was so engaging with individuals. Views on the building, I think she'd seen there was a doctor, a dentist, a licensed bar. It probably wasn't, sort of a big gym. It's a slightly more quirky building than most office buildings. But the pinch myself memory was just getting towards the end of the tour, and I'm thinking, oh, this has gone well. I don't think I've made too many slip ups. And I said, would you mind signing our visitors book? And I've been told, if you're going to ask her to sign the visitors book, please make sure the pen works. So I made sure the pen works. Anyway, so I'm just quietly standing there, and Majesty's taken off her gloves and picked up this beautiful ink pen and was halfway through signing the iconic Elizabeth when the pen stopped working. And she looked at me, and I felt in my pocket just to check I had a pen. And she gave a little shake, and thankfully it started working. But that was probably the most heart-stopping moment I've had in my whole career, was when you stopped Her Majesty signing her name in the visitors book. So, silly story, but it's the memory which will stick with me most clearly.
No, that's great. That's really great. So, a question for both of you now. So, lots of people listening and watching this podcast will aspire to become a senior executive or a CEO, like you both are. So what advice would you give to an employee who wants to one day become a CEO at their company? So Dan, I'll start with you.
Oh, fantastic question. Look, I think it's a journey of continuous learning. I mean, we've talked about, I mentioned ETFs, digital assets or crypto, even, a lot of specific areas of sustainability. Those didn't exist when I started my career. So I think the ability to as everyone says, kind of follow your passion, but I'd say where you do have enthusiasm, it counts for a lot. but joining organizations or starting your own organization that does value kind of lifetime learning. And I think that's something that not only takes you up the executive ranks, but even when you get to the top, being able to have an ecosystem, relationships, really where you can process and be exposed to new information and new ideas. That's really what keeps you relevant. So I'd say for young people coming out, education that you've done is going to continue well beyond university. And just really, I think, associate yourself with organizations and individuals who are really going to kind of encourage and help you on that journey.
Great. And Peter, what would your advice be to kind of aspiring CEOs?
So I think the first thing to say, Joe, is people who aspire too much can be pretty unpleasant individuals. So if you've got that ambition, hide it well. And the second I'd say is, for goodness sake, you be sure that this is something you really want, because being authentic and being able to stay the course is something that I think that you've got to be the same person at home as you are in the office, and that's a real challenge in some organizations. And the final thing I'd say is look outward. As Dan said, I think there's so much learning to be done, and competition is no longer an internal issue for corporations. It's how you constantly reinvent given what's going on in the outside world. So I think there's be certain you really want it, but if you do, just don't show it too much, I guess is the answer.
No, great set of advices there. So Dan, I know you and your wife are lucky to have 3 daughters. I've now got 2 daughters, 1 and 5 years old. Firstly, what advice have you got for me here, because I desperately need it? And secondly, how has your family supported you throughout your career so far?
Yeah, well, I think the latter. I mean, look, my family is, it's everything in terms of support, to what I do. And I think kind of giving perspective, and I think, Peter's kind of underlying message of humility. Certainly there's nothing better than a strong family to not only support, but to kind of keep you grounded and ensure that you have that humility tone, through that. I think also just having particularly children, but in our cases, daughters, that's the future. And I think that's the real underlying purpose, that if you think about our lot in life of working in financial markets and having kind of all the blessings for that, also comes with that responsibility, that we really do help promote, doing well by doing good, or whatever kind of motto you want to have. Those are tangible things that hopefully you experience in your day-to-day life with your family. And really, I think that's where things around sustainability, having hopefully a healthier, better, planet around us, but also, these efficient markets we want to build to allocate capital and help society increase standards of living. All that really starts at home.
Fantastic. Peter, last question goes to you. So on this podcast, Fixed Income in 15, I usually interview kind of leaders, influential investors like yourself. So we've had kind of CEOs, CIOs, well-known personalities. Who would you recommend I ask to be a guest on a future episode of the show?
Oh, that's a great question, Joe. So look, I think there's somebody, I've just read both his books back to back, and I think they both have pretty profound things for us all. And it's a guy called Mo Gawdat, who you may have come across. He wrote a book about happiness, and then he's written another book called Scary Smart, which is the future of AI. And as I look at our firms now, more and more work is going on to how do you apply AI to our industry, and how do you think about what the ramifications for that are. And Scary Smart is a fascinating book about the damage that's going to be done and the issues we face as we let AI loose on our businesses and our mankind. So I would recommend Mo Gawdat. That he's a guy I can't hear enough from at the moment.
Excellent. I would definitely check him out. Well, thank you very much, Peter and Dan, for your time. Great discussion. And for everyone watching and listening, see you next time on Fixed Income in 15.